Wow, okay. Well, thank you, Devo, or I would have just been talking to myself. To sum it up, back from the holidays, and Merry Christmas to everybody. Hope everybody had a good holiday, and go ahead and throw some coins or questions, whatever, because I'm completely out of the loop. I traded ES yesterday, and I've been keeping a loose eye on the stock market, but I haven't really been super active. I'm glad you told me that, Davo, or I would have literally just talked to myself for however long. What's up, Haas? Okay, I might want to share my screen on Discord. Okay, there we go. Okay. So on ES, right now where we're at, we just moved back up to the weekly open. Nice little candle shelf off of it and took that previous daily high. So I think we'll get somewhat of a retrace of this little morning move we have here. I like this 15-minute fair value gap right here. There's also some liquidity built up under these lows here and here. So I think that could potentially be a nice draw and then maybe get a re-entry off that. I probably won't trade today just because I have been driving all day and I'm not really in the zone to trade. And plus I got to go get that new iPhone. But yeah, if you guys have any coins, anything you want me to throw or to look at, just throw it down. I'll go over this trade from yesterday real quick. So I ended up taking 60% total and then getting stopped at entry. So overall, my target was the previous week's low. I wanted us to move into that and then kind of have this reaction we had this morning, but no dice on that. We got it on NQ, which was some pretty crazy SMT divergence between ES and NQ. I see EU and UJ. I'll do those next. So if we look, we took out last previous week's low and also these lows here. I made that lower low on NQ, but did not make it on ES or the Dow. So, is what it is. The trade was still super great trade just because of tight stop loss. So the overall bias for it, and I took a trade in the morning as well. The morning trade was pretty bread and butter, if you ask me. Came up and took out the highs. And then also the previous, not the previous daily high, the previous lunchtime highs, right? Yeah, it was right there. Mainly was looking at all these equal highs right here. And then, 1 minute, and we got our entry model. It's pretty clear cut. So here, this one's break a structure. I like the order block here because we kind of had this little last pivot where we had that sell to buy, or buy to sell, not sell to buy. We had that buy to sell move up, then move down. So that order block was a nice draw. And that's what I traded off of, just into the most recent liquidity pool. Because I was kind of in between. I almost wanted a long down here. So I was a little less confident in this trade, but the model was there. We took the buy side above the 830 open. So let me go back and plot that 830 out so you can see it. So we want to, oops, wrong tool. We want above that 830 open. And that was what made me want to short instead of long, because if you look, the way I was looking at originally is that, yeah, we came under this low and that was right, with the market open. And I could have seen a long there, and try to long off this right there or anywhere in this gap. But the reason I didn't was because that raid didn't happen until after the market was already, or I'm sorry, that the first raid happened before the market was open, or as it was opening, I should say. So I wasn't as interested in that as what kind of stops were taken during the session. I like to, if I'm trading that model, I like to trade the raid that happens after 9:30. So also, if you look, I think it was a 1 hour, maybe a 4 hour. Yeah, it was this 4 hour fair value gap we traded into right there. So for me, I looked at that as a higher probability sell, because if we look at the 4 hour order flow, we had this right here and this. This was kind of the range we were playing within, and we had a bearish displacement. So I would lean bearish there because the structure is saying bearish, right? Now, obviously, we ended up kind of reversing off these lows, but overall at this point, I was looking at a more bearish narrative, it seemed like we were drawing down towards sell side. So based off that bias, then I just used the lower time frames to enter after we took out that buy side. So displacement, shift, and structure right there. Order block entry. Just target that morning liquidity. So now the trade that I took another trade in here, but it was just kind of a little silver bullet entry. I won't go over that one, but the trade that I took here, where I was trying to target the previous weekly low. Main reason I was trying to target that previous weekly low is, for one, I like using them as draws on liquidity, especially if they agree with that 4-hour structure. So in this example, we had again that low right there and this high. I was kind of looking at those as the dealing range on a 4-hour we're operating within, and we already came up and repriced into this fair value gap and balanced this price range right there. So then I look at that as, okay, well, we're probably going to go for the lows. Now NQ did go for the previous week's lows. ES did not. It's okay. That's why we take partials. And another confluence that I had that made me target that far away was the standard deviation of this morning liquidity raid. So, or not morning, I'm sorry. The, oh, my mouse battery's about to die. Hold on 1 second, guys. So, the other confluence that I had to target the previous weekly low was taking the 5-minute moves. You know, if I'm using the lower time frames, I like to use a 5-minute. This is drawn mobile, so you bear with me. But the little impulse move that really pushed up into the POI. So we talked about this a while ago on a stream, and it kind of comes from the Bridge Builders video from ICT, but it's just a different take on it that I like to use. That if I am trading a liquidity raid, which every trade that I take has some form of raid, whether it's on the 15-minute or the 5-minute or the 1-minute, but usually I'll try to use my lower time frame if I'm entering on a lower time frame, and I will measure that move with the fib tool, and I'll use standard deviations to line up with price delivery arrays or liquidity. Kind of like how you can use it for the Asian range and the central bank range, but I use it a little bit more more often, I guess you'd say, and not necessarily with time, just with price. But in this example, I targeted the previous week low because it kind of lined up with that 4th deviation. Didn't get that, so where I took profits on this trade, let's go back into here so I don't keep losing my spot. Where I took profits in this trade were these 1-minute lows right here, right? The beginning of that little impulse move. And that was just kind of to protect myself. I took 30% there and moved stops to break even because the risk reward is pretty nice there. You know, usually I wouldn't take that if the RR was super low, but it was pretty nice. I think it was around 2 point something if I remember right. Yeah, 2.38. So I took 30% there, moved stops to break even, and a lot of times I would have taken the trade in full there, but I had more confluences on that 4-hour chart. Also, our 15-minute chart right here was pretty clearly bearish, and we pushed down, pushed back up into a premium of that morning move, and then that first fair value gap, and it wasn't the breakaway fair value gap. So I wasn't trying to take it all the way up here. I didn't see any reason that price would go up here. If it did, I would most likely look for buy side liquidity. But since we got our entry model inside this first fair value gap, then I know that price is pretty likely to go down towards the sell side, and it's also at a 2 standard deviations away. So that was the second take profit. It was right here. So I took 30% of my trade at each area, and was going to take the last 40% down here, but no dice on that, which is fine. It's totally okay. Kind of wish I would have taken it, but I look at it as, you know, it's part of the system. You can't look back and, you know, there's always going to be a if I did this, or what if I would have done this, or what if I wouldn't have done this, stuff like that. There's always going to be a what if, so you can't think like that. And I catch myself doing it sometimes, but it's just important that you quickly stray away from that thought process. Now, I didn't even get the best entry one could have got. I just entered on the, it was right around this area. It probably was like a tick or way, give or take. I drew this on my phone. I didn't use a limit order. I was marketing, so it's probably a little different. But basically, I just watched this displacement down. It was after this candle closed right here. That candle closed under it. I found that, you know, if I'm using a tight stop loss, like for instance, this one I use just above that fair value gap, then most of the time, if I'm going to get a very small benefit in terms of risk to reward, I'll just market entry. That's just my style. Some people say, you know, it's being impatient. I used to think that and kind of like tell myself I was being impatient, but after trading for a while, I realized, you know, okay, let's just look at the difference. You know, okay, so we're at 38.38. You know, we have a point and a handle almost. Yeah, something around there. So it's kind of like, yes, it definitely makes a difference. But to me, the risk of missing the trade, especially when it's already a high risk reward trade, outweighs the benefit of that point better entry. So, and that's different for everybody. Some people would disagree with that, but that was my logic, and that's why I market a lot of the time with the 1 minute entries. So now it'd been different if this had been, you know, price had extended all the way down here and there's massive fair value gaps. Then I would have waited and set a limit and entered that way. But you know, if it's just gonna be a minimal risk reward benefit, I'm not gonna risk missing the trade. So that was it for ES yesterday. This morning was really clean. I didn't trade this. This is just looking back, so I don't want to be that guy saying that I called this, so to speak, because I didn't. But looking back, we had a nice push right into that 8:30 a.m. open, into that 15-minute fair value gap. I might, hold on, this cord is getting stuck on my monitor mount. But and this is another example of where you would want to market on a 1 minute entry. So you know, probably could market on this close right here. Nice strong liquidity is that previous daily high. And I can't stress enough how if you're not marking your previous daily, weekly, and monthly highs and lows and being mindful of them, you know, you're really fucking up if you trade ICT, because, you know, most of the time intraday, the draw on liquidity is going to, if it's not an imbalance, if it is a liquidity pool, it's going to be a previous daily high or low a lot of the time. So, you know, if you're bullish, let's look on the daily chart and say when we're bullish, if we look at all these days where price is moving up, how many days did the candle take the previous daily high? You know, we didn't right there, did the next day, didn't right there, did right there, did the next day, next day, next day, next day, didn't here, did the next day. And you can see that, you know, once we're bullish, if you were trading and you caught a move, you know, in a discount of that day, like under the 8:30 open or under the midnight open, then targeting the previous daily high can be pretty profitable. It's not going to happen every single day, as with any strategy, but I highly encourage you to be mindful of where those levels are, and always be thinking, you know, if you know, you're establishing your daily bias based on, you know, draw and liquidity theory, then you should be doing the same with your intraday price action. What's up, Niall? I just now saw that chat. So, and after we come up above these levels or below them, you can always be expecting some kind of move away, especially when they're paired with other levels like the weekly open in this example. So, this week's been pretty wild as far as, I mean, it's the week after Christmas. Monday was closed as well, so, you know, I mean, this doesn't look bad for a bullish continuation through the week. I mean, this would have been an ideal to happen on like a Tuesday. And let me hide some of this just so we can get a better perspective. So that previous daily high, or even this high, you could look at for a shift in market structure on the higher time frame, which is this 1 hour chart. So if I go to the lowest candle body to the highest here and go to draw an OTE fib, you know, let's look on a 15 minute, see if there's an order block. I kind of like this little down move right here, but also that we could look at that as liquidity. So I would just be watching optimal trade entry if we are lucky to get a push down into that tomorrow for a potential buy entry. And again, it's kind of weird trying to use this weekly power of 3 on this week since we only have 4 days. because we came down. We have our accumulation right here. You could really say all of it. Push down. It's pretty late in the week, though. I wouldn't try to force that. But usually, if I get a push down early in the week and then I get a shift in structure with this much displacement, I'll look to frame entries around optimal trade entry to target, equal highs above, or maybe even this previous weekly high up here. I don't know if the market has enough juice in it for that. Yeah, it is the massage chair. Oops, right over here. Funny you notice that. So let's look at euro dollar. So still trading up in this daily order block up here. I haven't really been paying too much attention to euro. I'm not a huge fan of this price action. I mean, there's definitely opportunities to be had, but I think that AU or GU has been a lot cleaner because this is just, I mean, there's definitely lower time frame entries, but my style for Forex is not really that solid right now because I like using the higher time frame since I'm not watching it intraday as much. I wait for the higher time frame setups, like on a 4 hour. We haven't really came back down where I was a interested buyer, which would be down here in this order block. But if we look at the overall structure, it's all over the place because we've got this high up here, because we came up, move this a little bit, came up here, put a high in, put a low, high. It's really kind of hard. I don't know which one of these was made first. And then you form this massive range here. Then you started pushing down. It's just, to me, it's one of these things where I'm going to wait on euro dollar. So overall right now, though, I'm going to go to a 1 hour. There's going to be a ton of liquidity above this high, right? So one thing I want to do is I want to go back and I'm going to take a rectangle tool. I want to extend this back because this could be looked at as a rejection block. So we wicked right off this order block. All right, so if we go back and we look at, why did we wick? What was this reaction? Because we took liquidity, right after we got a displacement over the downside. So now, to me, this range is going to be pretty important because I see a lot of institutional sponsorship here between these levels. Now, we've taken out the sell side numerous times, right? It's just been kind of like a range-bound, manipulated week or so of price action. And when I look here, I look at it as in, this rejected pretty hard off something. Now, we didn't get the push down to where I wanted us to go, but we did get that shift in structure. So that tells me there was a lot of volume coming from this level. So what I would do if I was a euro dollar trader, and I'll set an alert for this, is I would wait and see the price action at this rejection block. So I'm actually gonna label this one. I'm gonna set an alarm. So now if we don't get a bearish reaction, I'd probably send a 5 minute, watch for a 5 minute entry. If we don't get that there, I mean, I don't want to be that guy that points out the obvious, but you're going to go for that high. And then that's where I'd revisit it. But again, I just don't think that this price action right here, this isn't for me. It's not really suiting my style. I know a lot of people are still killing it. Let's see the order block I've drawn on EU. Would it not be the candle's body excluding the wicks? If you're talking about this right here, the one I just, let me go back to 1 hour. The one I just drew, I would be looking at this as a rejection block. If you're talking about this back here, I just drew the rectangle was based off of the wicks of that other body. It wasn't anything to do with these candles. Or if you're talking about the daily order block, I'm just using this candle right here. It's kind of choppy. It was probably drawn on mobile, and I just include this high, but the order block that I was that right there, that's what I was using as reference. Hopefully that answered the question.
Hey Casper, can you go over AUD USD?
Yeah, I got you, bro. Aussie dollar. Let me look at UJ, and then I'll do that one. The one below with the X drawn on. Oh, Yeah, for me, I use the whole candle. Some people disagree with that. That's just the way I do it on the 1 hour. Because the way I look at it is an order block is kind of the down move before the up move that takes structure. Because if we are bullish, smart money is buying on those down moves. So some people use the body. I know ICT talks about only using candle bodies. My strategy is a little different, so that's kind of the way I use it, because I'm not going to be looking to enter off of that level. I'm just looking at this whole zone for my entry model. So for me, it's more of a narrative tool than an entry tool. So I'm not trying to I don't have to be as precise, I guess, with the framework of it, so to speak. It's like with a fair value gap. I'm not really one to mark 50% levels, stuff like that. But everybody's style is different. So USDJPY. So with UJ, originally I really wanted us to come back up into this daily order block right here, or this large candle you could look at. I haven't looked at this chart in a little bit. So we took out the stops here, formed some equal lows. So this right here is what I would like to see get swept. I wanted to see a big push, a little bit more of a push up before shorting the yen, just because all the stuff that BOJ has going on right now. Oops, let me do that. Has me a little bit more picky with my trade setups. And I look at it like, okay, well, we took liquidity here, shifted down, and then shifted down again. So this last range, and it was clear on a daily, this is that buy to sell range that caused the big down move. So if I want to sell into these lows, I would like to get a push up. If I don't get that, that's fine, because I do see this pretty big fair value gap right here. I'm aware of that. And the 4 hour is showing some displacement down. So, if it goes without me, that's totally fine. I'm not going to chase this one. But, so we have that push down. You could look for maybe something up in here if you are, trying to trade it more actively. For me, I'm not as eager to trade UJ right now. And I'm not saying you shouldn't be. I'm just saying it's not one of my go-to pairs. But if I get a nice push up in here, that's where I would look for it. So let's look at Aussie dollar now. Pretty close to where I had originally wanted to look for some shorts based off of, I think it was a 15-minute. Right here. Now, one thing I will say is we have this low resistance run on liquidity here. So I wanted to get more of a quicker entry off this. Once this structure break happened, this is where I was watching for that. I wanted to kind of get a push down, and if I was going to trade it, get an immediate push and just target into some of these lows. Because looking at this 4 hour, or no, the 1 hour, this order block is what really has my interest. So I posted on Twitter about the daily 3 drive. Right, so we pushed up, took liquidity once, twice on these 3 legs in price into this daily order block. So when I look at this zone right here, what's the what kind of caused this big down move? Well, one could draw this whole zone right there and say we've been in it for a while, but I think it's too big of a zone to do that with. And then on the 4 hour, I don't really see a clear zone either. I'm not going to use this or this. Again, it's too big of a zone. And then I go to the 1 hour and kind of dissect a little more. And I say, what's that last up move before we really took structure? So kind of tracing the order flow. Price took liquidity here. So we know there's some demand in this candle right here. So price kind of pushed back up, pushed down into it, halted, and then blasted through it. So I know that there was some kind of involvement in this candle. So I think that's the higher value zone. Also, everybody that's trying to short EU or AU through here, here, and here, if this gets taken out, but everybody's getting taken out, right? Because we had that big down push, and everybody wants to get short and kind of catch the move, and then they get taken out here, here, all these pushes up. So the ideal zone for AU would be up in that buy to sell area right there. But after that, I would look for more shorts. So what's the gold? Let's look at gold. Oh damn, the Discord chat bumping. As far as not the chat, but the amount of people in here. So let me go back through some of these chat rooms because I don't want to miss anything. I don't see anything yet. Cool. DXY is another chart I haven't looked at all. Give the FVG, please. I've been waiting for this shit for fucking, I think actually 2 weeks now. So not much has changed here. We've just been consolidating. This weekly fair value gap and monthly order block has my attention. We've been talking about this for a while. It's been playing with our emotions, but I think we're gonna be getting this soon. So at that point, I really want to evaluate price action on the dollar, because if we do start to get higher time frame bullish displacement, I think that's going to be party's over. But I'm not necessarily expecting that. I'm trying not to predict and react more, but I am, I do see the value in this level. Monthly order block, weekly fair value gap. If we look at the monthly, I've got this monthly order block's the most recent one, not touching this one. And then if we're looking at, like a 12-month chart, to me, if I showed you this chart, hold on. If I showed you this chart and didn't tell you, what it was, let me do this because I want to be able to draw on it. We'll go to USDX. So, you can't use this one. Is there more than one? I don't think there's another one. No. Well, I wanted to show you guys. I'll just go back to this one and show you. So if I'm looking at this, you look at this right here. We have that push above this high, right? And trade back down to this fair value gap. This is on the yearly chart. Each one of these candles is a year. Trade back down here and expand that rapidly off of it. I mean, yes, we did tap into this order block, but we've got these relatively equal highs. This would be something I would want to trade into these highs. Again, it's using a yearly chart, but dollars, to sum it up, the dollar's at a pretty pivotal point. Once we come down here, if we do start to get that bullish price action up, I would be looking for every bit of 120. If we don't get any reaction here, then the bulls may have some room to have some fun down into this monthly fair value gap. That would be massive for markets. Gold, what's the decade chart looking like? Probably not much. What is that, 120 months? Yeah, there's nothing. Let's see 100 months. 108 months. 90 months? 50 months. 6 months, okay. Let's see. I don't think it'll let us do much more than a year. Yeah. Oops. Let's look at gold.
It's pretty sad. I only use monthly for entry.
Hold on, my bad if you're saying something. I don't have my headset on. Did you say something?
Yeah, it's too bad, man. I wanted to use those charts at monthly for entry. Tight SL.
Right, fuck. Use the monthly MSS model. I mean, you could. I mean, you can use just a daily chart even. Like it'd be, take a lot of patience, but probably less stressful for a lot of people. Gold's another chart where it's just been. This is one that's it's been pretty wild lately. So I'm just gonna. It's a monthly volume imbalance right here that I hadn't really paid much attention to. Traded into the other day. So, I mean, it's just, I've been wanting a gold retrace for a minute. Came above those highs, tapped in that monthly volume imbalance. Weekly, I'm not really seeing, this is kind of like a janky bit of price action on the weekly right there. I don't see anything super clear. you know, in the 4 hour, to me, you know, we took this buy side. This is a pretty interesting leg in price right here. Reacting to that. So overall, you know, the most recent pretty clear displacement was this right here on the 4 hour. It came up, took out those lows, but again, we got a closure, but we kind of just accumulated right there and pushed back up, ranged a little bit. Now we took the high, but a pretty ugly reaction off of it, but not very convincing that we're just going to reverse from there. So also came back into this weekly opening gap. Volume imbalance right there, and pushed off of it pretty nice. So, you know, to me, I think we're probably going to go up to this high at 1840 on GC. If you were using XAU charts, it's going to be a little different for you, but I like that high as a draw. I mean, I don't know if I would be actively trading into it just because, you know, you're at so many monthly levels. You know, this is why I like to kind of shift around what I'm watching, but if you do get a closure up above this, you know, then I would look for more longs. Until then, for me, it's kind of iffy. So it's one where, you know, I'm looking at it and I see it, but it's not the most surefire setup on my watch list. But if I had to pick, I would say probably moving higher. Because if you look, I mean, we're taking out the low into the higher time frame POI. And then we get a nice shift. Took a while, but a nice shift over here. It's ugly ass price action on the 15-minute, for me at least. But and then you look. This is why I like using wicks. Because look, we had that. What is the down move that caused the up move? So down moved right there on the 1 hour, and this is using all the wicks. Like we came up, closed above it of these candles right there, tap right back into this buy zone. And as a 1 hour fair value gap. Same thing here. What was the down move that caused this break up? This down move right there. That candle, that pivot to this pivot. And look what happened. Closed above it there. Tap back into it right there. That's not, you know, we didn't tap into the body. We didn't tap into a fair value gap or anything. We don't have one to tap into. But that's kind of why I like using those, because one thing that I think that a lot of people have to understand, and this is something that a lot of smart money concepts traders have problems with, is you don't have to be the most surgically precise, laser precise person to make a lot of money. You don't, right? You know, there are a lot of traders out here that are making 2R trades that are making more money over time and more returns than a lot of people you see posting 50, 60R trades for numerous obvious reasons. And I think that a lot of people kind of get sucked up into the idea that, you know, every trade has to be 10R, which is just not real. It's just not real. It's just not. I don't know anybody who's actually trading real money that is consistently every single trade netting 10R, you know. I'm sure there's someone out there, but I haven't met them. But you're going to get those trades sometimes. I'm not saying you won't. You know, I just targeted 12R in a trade yesterday, but you don't have to be that surgically precise. And, you know, for instance, like if you're a trader that trades setups like this, like let's just, you know, hypothetically, just if this is not your setup, just play along for a second. So let's say if your buy zone was, you know, this candle, this was your order block, and this is all you were willing to trade, and you know you saw multiple trades go away without you, but yet they were tapping this candle, and you saw, let's say, take 10 trades, 5 of them ran away from you, 3 of them were losers, and 2 of them were winners, right? And if you would have taken the other 5, let's say, you know, maybe 2 or 3 of those would have hit full TP. Now, if you have a set of 10 trades where you don't take trades on half of them, but those would have had a winning, you know, overall profitable result, maybe not a high win rate, but whatever, if you know, your risk reward was high enough, or maybe your win rate was high enough to where those 5 trades, if you added them in to the 5 trades you actually took, would you have made more money taking those trades? It's not about would I have sniped a bottom, and because a lot of people would mistake this for being patient, and there's a fine line between being patient and too picky or too hesitant, right? So hopefully that makes sense. But I think a lot of people that trade ICT that are new to it, or people that are trying to impress other people, or even impress themselves sometimes, because let's face it is fun to snipe bottom ticks and all that kind of stuff and have super tight risk to reward. But I think a lot of people, especially whenever they're in their demo trading stage, they lose sight of the actual goal, which is to have a profitable stream of income. So if you're missing a lot of business opportunities because you're too picky about X, Y, and Z, and you're noticing like this is causing me to lose out on potential money, then you got to change your plan. And there's a fine line of doing that correctly and over trading and chasing trades. I don't think that people that don't have effective, I guess I would say more people that aren't emotionally sound when they trade are going to have a hard time determining, when to change your plan. And it comes with time, but, I've done that. I might say, okay, well, I was only trading. We talked a little bit earlier when I was talking about 1 minute entries. If I only trade, let's say if I only will trade the top order block or something, instead of just trading on the sell right here, instead of taking this and just, taking a sell on the market or on the close and just market entering. Let's say if you have, you only take this and it's like, I get 13-hour trade. And let's say that setup only happens 4 or 5 times a month, and you're trying to pass funding challenges. And on top of that 4 or 5 times a month, 2 of those happen in London session, and maybe you don't trade London, or maybe it was a day that you had to go do something else. You're a lot of times a trader who is confident in the system and the overall narrative playing out that takes this trade. Yeah, sure, it's not gonna be as pretty, or it's whatever, but they're gonna make more money. And it just takes the you got to be unbiased and work with reason, because a lot of people forget they're in it more for appearance than they are profits, and that's a huge thing that I see happening in the whole SMC Twitter community and a lot of discords, is people they don't even look at it in a turn. You can tell who's trading live and who's not a lot of the time, because people are more worried about getting super high risk reward, or kind of posting that chart that looks like tiny stop loss and like this. It's just if that was real, those people would be fucking millionaires. If you could hit 50R a day, like, let's just see. If you hit 50R a day, let's just say you started with like $5,000 and you hit 50R a day, right? Or not say 50R, 50R a week, because some people say that, or even like 20R a week, right? I saw this. It's funny. I saw this. Let's do this. Like, look. Okay, so all these people that are saying they're hitting that. It's like, I mean, maybe some are. Kudos to you, but it's just like I don't know. But I saw something recently. It was like a YouTuber said that he would give out 5K to any trader that could get 20R a month, or I'm sorry, 20R a week for 3 months. And the comments were all like, "Oh, dude, I could do that easy." It's like, bro, if you could do that, you probably wouldn't be like, you'd probably be in Tahiti. Like, what are you talking? It's just crazy the shit I see sometimes. So I'm done ranting, but just sharing that with you guys. Hey Casper, what's your win rate for Forex? I haven't really kept all of my stats just for Forex, but I would say with the 4 hour and 15-minute strategy, I'd say it's probably just under 50%. If I had to guess, probably similar to crypto. Because I know when I was trading on Binance heavily, it was like around like 40 to 50% pretty consistently. And that was before crypto completely like nosedived off a cliff. The last trade I took on Forex, let me see. I think it was a UJ sell that I got stopped on. Yeah, it was UJ. And that was on the 21st. That was the last time. I don't really heavily trade Forex though. I like it. I was getting a little bit more into it, just watching some of these pairs, but I started catching myself trying to watch too much at one time. And I think what suits me best is having pairs that I swing trade or at least short term trade, and watching like a 4 hour and a 15-minute. And then I have my pairs that I day trade, which indices is where my heart's at. I've been doing it for a while. This is definitely my most consistent area, and it's what I'm used to. So I like trading indices. But if you start watching too much stuff on the lower time frames, like using like a 15-minute, 5-minute, and 1 minute, kind of those intraday charts, I think you start to miss setups. You start to diminish your relationship with that chart and like your understanding of that chart. Because if you're really watching a chart every day, you're aware of the weekly open, you're aware of your bias for the week, you're aware of all these higher time frame levels, and you've built that story. For me, I perform way higher if I'm focusing on one or two charts, and usually they're both indices, than if I'm watching like 15 charts. So I take the same principles that I use for the lower time frames as far as the type of entries and the method I use for developing a bias, and then I translate that to a 4 hour chart for Forex and crypto. So instead of watching the 1 hour is my main high time frame, I'm watching the 4 hour. Instead of using the 5 and 1 minute, I'm using the 15-minute. So less trades, but it's kind of nice that way, because then I'm able to catch some of those moves, like for Aussie dollar, that zone. I'm just not even gonna watch this zone. If I miss it, I miss it. But I'll get an alert up here, cool, I'll watch the 15-minute for a shift, and if I can get a trade entry, I'm going to target all the way down here. So same thing with euro dollar. That's why I really haven't traded. I've been waiting for this. UJ, I got stopped, I think somewhere down in here. It was like right somewhere in here, because I wanted to target those lows, and then I realized you're shorting at the bottom of a range. What are you doing? And that's why I just hands off. So GJ is another setup similar to UJ that I want to watch if it makes it up there, which it very well may not. Euro pound, it's looking pretty crazy with all these highs. Is it the same with indices? I'd say it's higher with indices, but I have a way lower risk reward. Like I'll take 2 hour trades or 1.5 hour trades on indices sometimes. Look at the Russell. I've been watching this a little bit more recently because I want to take some of my personal money, instead of using just a funded firm, and put it in a brokerage account for. I'm in between commodities or trading options, but I like the way the Russell moves. If I do commodities, I can trade futures as well. So honestly, this down candle right here looks super nice. Equal lows right under it. And also that's, no, never mind. I thought that was a different time. Let's look at crypto. I haven't even opened a crypto chart. So not much has changed since I drew this right before Christmas. Overall, I'd like to see a push into this low, and then a move up into this area. That would be the Bitcoin thing to do, max manipulation. Until I get that, I probably won't really be watching Bitcoin. Or if we don't get this low taken and we get a push up into this zone, I would still look for shorts. But overall, I like these lows down here. ETH, I got an alert on. Check out Cardano, Ethereum, and Matic. Okay, cool. So ETH, I talked about this for a while now. You can see where I drew this. You hide it so you can see we moved down into this 4-hour zone. I got the alert, but we haven't got a sweep. So I'm actually going to go ahead and set another alert. If we can get a sweep and then a break of structure out of this zone, then I would look to long Ethereum. Overall target would be just this high right here. But probably I'd actually go for the low hanging fruit, just these right here. So the reason being is we came down, took liquidity again right there, and then took a high. So that indicates that this is going to be a valuable area. And we also had a sweep into the zone with these lows getting taken. Now that we've got one tap into the zone, I want another tap and then a shift similar to this right here. You know, just like we had over here, we had a tap down into a zone, sweep, break a structure. So again, tap, sweep, break a structure. At that point, I'll look to frame longs into these highs. I do think it has a chance of going higher into, was it a 4-hour or a 1-hour? No, that's right here. So this breaker block right here. And then also I've got this pretty big fair value gap, buy side liquidity resting of this high. And then there's a 4-hour order block here as well. So there's a lot of levels up here towards this 1250 zone that I would like to see Ethereum at before I want to sell it. But I'm liking Ethereum better than Bitcoin right now. It's just overall quality of price action. Cardano, Jesus Christ. Shit looks dead. I guess is it a monthly or a day? Oh, it's just daily sell to buy range. So to me, again, this is another example of using this whole range instead of just one candle. Because I look again, you know, smart money was if when you're bullish at this point, you know, just like we had this push down into this zone, you know, because we had push up, this whole move down, sponsored this push up, this whole move down, sponsored this push up. Now, while we did close above it and then tap down into it and then push up, you know, kind of trading. So it's like, watch, and this is going to be, again, it's just the whole idea that if we're bullish, smart money is involved on these down moves. That's where smart money is buying. So we push up, push down, expansion. So if you're looking at these two candles, and we have, you know, if you're just visualizing what's actually happening, you know, push up, and then you have a wick, that's a little push down, just like we have right here, but you're just viewing it from a different time frame. So we have a push up, push down, which is this right here, that wick, and then a push up. Guess what price trades back into? Right into that buy to sell, or I'm sorry, sell to buy range. Same thing right here. Push up, push down, expansion, and then guess what price tapped into? Right there. Now, if you go on a 4-hour, it's going to be an order block, or maybe a 1-hour. But that's kind of how you can track order flow, so to speak, and just watch where, you know, where follow the money, so to speak. So in this example, Cardano, I'm just going to draw a line to save time. So that's where I think we're drawing towards, that 2294. So that, I would say that's your first stop, so to speak. And that's also that weekly fair value gap. So I would be bearish on Cardano until then. Now, if I was trying to trade it, I'd probably be trading the 4-hour. I like this fair value gap right here. And we got liquidity right in front of it. So you may not get that, but that's where I would look to trade. Also, it's probably going to be an optimal trade entry right at the beginning of it. So if I was looking to trade this, I would wait for sells, and then I would target that 2294. If we take out the 2294, then I'm going to look for the 4-hour to go bullish. But other than that, I'm not really interested in it. And, you know, it's picky. You may not get setups, but I think that's the best way to be right now with crypto, especially altcoins. Is there some news or something? Cody, okay. You know, that's just the way that I'm trading crypto right now. So like, for instance, if I'm looking at this right here, and this is a 15-minute on ES, I'm waiting to trade up here, or, you know, if I'm going to day trade it, I might try to look for longs as soon as I get that bullish internal structure, because that's what I'm using for that pair, because I'm day trading it. But if I'm not day trading Cardano, I'm going to use the same principles, but just translate that into the higher time frames. You don't want to just get burnt up in these ranges. Once you get a sweep, then a displacement, but not breaking structure, will I still take the trade? No. So the only way I do stuff like that is using SMT with indices on low time frames. But, you know, to me, the tap, sweep, and shift is what I need to trade based off this model. And this is something I back tested with Eurodollar and with Bitcoin. I need to still, I've been saying I'm going to make a Forex replay video forever, but I need to get on that, because I think you guys should, especially a lot of you guys who are having trouble holding trades or executing, or if you take some losses in a row and then you're like scared to trade, I think that would it could benefit you guys immensely if you were just take some time, collect some data, and say, hey, okay, I know this works. You know, it's going to provide you with the confidence you need to execute. So we'll look at Matic, and then I'm going to hop off here, unless there's other XRP, Substacks. So we'll do Matic and then XRP and then hop off. So it took that low right there, those equal lows. No move above these highs, so I would say lower for Matic, unless you get a sharp push up after clearing this. But I would say overall draw is right here. Again, it's not really the kind of setups I'm looking to trade. I think there's a daily, there's a daily unbalanced price range here from there, and this imbalance right here, closer to optimal trade entry. So for me, in order to see buys, I want to get a closure above this line right here, right? Or if we take out this low, you know, whatever high, the most recent high, like for instance, if we just went down right there, I would want to see a closure above that to then take buys up into the equal highs. But if we don't get that, then I'm chilling, because I'm not going to try to take sells here. In order for me to take sells, I want to come back up into this blue zone. So waiting game with Matic as well for me. Again, the idea is just not to get burnt out, because let's just look. If you're just trading this is since, you know, it's the 29th. If you just traded in this zone right after we took those lows, that's 9 days. To me, this doesn't really seem like, you know, much value. There's not really, you know, there's one good move really. I mean, I get it. If you're on the lower time frames, you're able to catch moves. So I understand that, believe me. But to me, it's just, you know, I like using the higher time frames to time those moves. So I just don't see any big opportunities on this specific chart. And also hope you're doing well too, Substacks. Sorry, I just saw check our XRP. It's all my brain saw. I didn't mean to ignore the other part of the message. XRP, dang, it actually kind of played out nicely. So I originally watched this zone right here. After we took out that high, traded back into, and this would be a good example for those confused on what I mean when I'm watching these zones. So we created a 4-hour zone by taking this after sweeping liquidity. So go back to a 15-minute. Oh, I remember now. This is why I didn't take this. We talked about this actually. My brain was, so we got a tap, but we didn't come down and sweep that low. Now, you know, price did end up coming up and taking out this high, because I would have looked at this really as your most recent high before this low was made. Oh, actually, no, I'm sorry. Apologies. This would have been it right here. So if you look, price tapped. We didn't get a sweep. So for me, no trade. Does that mean there's not a trade? As we can see, that's not always the case, but it just doesn't fit my model. So we closed up above that high. You could have used this range as your dealing range, so to speak, and just looked for a, area at a discount or equilibrium. If we look, this is pretty choppy. And the last up or last down candle would have been this right here, and that was actually the nice entry. Can't say I would have taken that even if I would have gotten a sweep and had this kind of price action. You know, I would have probably had my eyes more on this. But push up into that high. So overall, nice price action out of that zone. But for me, I didn't get a trade. Now, if I'm looking here, I'm going daily. I think the overall draw is going to be those lows at 31.2, if not lower, but that's the most clear draw I see. And if we look at this daily, the last little buy to sell range, which is a pretty massive range, we did get this shift inside that. Got to push down. Again, it's not really the most ideal zone for me, so I'm gonna wait. You know, this could be going down to the lows, but you know, if you were watching XRP, I would watch price action in this zone, that little 4-hour candle. I'm still gonna keep my eyes peeled for this up here if we get that. We'll see. So I'm gonna wait and be patient. But if you're a avid XRP trader, I would watch this 355 to 3596. And if you get maybe a lower time frame entry model there, these lows would be a nice target. And obviously liquidity in the range. Can I show what zones I was watching on ETH? Yeah, sure. I got you. And I'm gonna hop off of here. So on ETH, I want to get this low we just made. This was that yesterday? Yeah, yesterday. I want to see that taken out, and then watch the 15-minute for a displacement break a structure up. Now, if we get that, then I'll look to long up into these highs. If we don't get that, I'll be a miss or until we get back above these highs into this zone, and that's where I'll look to short. So we're in the 4-hour candle. We tapped it once, but I want to tap it again. So that right there, this kind of price action will trigger a long for me. But until then, chilling. So happy to be back. Appreciate you guys coming through for the stream. And I would chop up, but I gotta go, bro. Should have hopped in earlier. But let's say we're gonna have another stream tomorrow. So I'm gonna go over a couple different trade setups and just things to watch out for, because I don't think there'll be much live action to watch. It's gonna be New Year's weekend. So we'll go over that tomorrow. I'm gonna be uploading a video later today, and then private class for the Discord on Saturday. And if you want to get a free trial to that, you can use code CASPER. Actually, until the 1st, use code FREE, all caps, and you get a free month to the Discord. So yeah, I think that's it. If you guys have any questions, you guys know how to get at me. And until tomorrow, I'll see you later. Peace.